Hey, it's Mack with PriceActionTradingSystem.com. It's Tuesday, it's January 5th. It's day two of the new year trading, and another pretty good day. In the big scheme of things, it's just a trading range. Um, Prices went as high as maybe 2018 or so, but most of the day we were right along this 2012, 2013 range for the highs, and we went as low as around 1992. And but we spent most of the average low was right around this 1998, 1999 area. So there were some nice trends. I mean, that's enough room there that there's some nice trends up and down here. Um, and most of them played out perfectly. You're going up, you got to break a new high. You actually had a second attempt at a new high. Then you're coming down, you got to break a new low. You're going up, break new high, coming down, break new low. And really, your trend didn't start up till right here. Um, you're moving up, break new high. You're coming down, break new low. Moving up, break new high. So it all worked out perfectly for the most part if you just found these short-term trends. And uh, and really, that was the way to go today. Just trading these short-term trends, and they're pretty straightforward. Nothing out of the ordinary. Nothing difficult about them to find. But let's back out. We'll talk about the trades, and we'll wrap up today. But it was close to, it was really 8 o'clock, almost close to the open before I found a trade this morning, really. Um, you come into 7, we were already moving higher. We had a nice trend moving up. And I marked this one. I marked it in green. Um, this is right about, let me see exactly what time. It's just right before the open. Looks like around 8:15 or so. We bounced off of that trend line, and the way I got this trend line, just so you, I drew it off this top, and you can see it fits well. And if you just slide it over to this lower one, um, you get this bounce here. And even if you weren't sure, even if you had it right here, um, you're probably going to get to the same spot. But I believe it to be right here along that close, and you can see those bars bouncing right off of it. So even if you waited till this first bar, really you probably could have drawn it off the red one. But even if you waited till that first green bar, let me get this out of the way, goes there, and you drew your line right up, and you just drug this one over to right there and touching those. Um, you see this next one backs up, or it actually opens down here, and it's right off the line again. So you shouldn't have, you should be able to find this line with, if you're experienced at that. And it's not a perfect setup. It's not even a great signal bar. It's kind of a middle of the road signal bar. There's some stem at the top. It's a first entry. There's some, but what I looked at, this is basically, even though this is a failed second entry short here, there's a double bottom right here. And it's not a perfect double bottom, but it's close enough to call that a double bottom. And so then you got one attempt to go shorter and a second attempt. But I like this one because it's bouncing off the trend line. Um, and this is a really strong move here. So you're probably going to get another push or two up. And you figure prices are probably trying to come up here, at least into this area, maybe all the way to here. Um, and you don't have a break yet of this trend line. So I like that one. There's another way you could have looked at this too. You could have had your trend line all the way over here, and that works too. And it could be that it's even a two-tiered channel, and you see that even that works. So there were several different ways to look at that. So um, if you drew the first channel and you decided to move this one equal distance, that still gives you the same thing. But this is a first entry, but this is a strong trend, and you don't have a lot of room in between the trend line and the trend channel line up here. Here's your trend line. This would be your trend. The other side would be the trend channel line. So there's several different ways to look at that one, and this is probably the most correct one in the end. So I'm going to leave it this way. I'm going to go ahead and I usually lighten my midlines. But this bounces right off the trend line, and you could have found it several different ways there as I showed you. But what I still made this one green. What you want to do is let prices break above and then maybe drop a limit order a tick or so back in here just to make sure you got plenty of room to get out before here, because notice you did get some resistance there and it backs up and it could have turned and went the other way there. So always make sure you got enough room to get out, and you'd have to use a limit order, and you would have gotten filled at least a tick, maybe 2 ticks back into that. Um, and then you pulls back. I don't think you want to risk entering here with a double top there and no more room than that. And by the time you get a good signal bar, it's too big. Although it doesn't surprise me that it went higher, I just think you've got to enter here or you got to skip that one and wait on something better. And then notice what happens. To come back, you get a first entry pullback. You don't want to enter a second entry there because we've already got a break and a new high. And this is just kind of stacking up sideways here. So you just want to kind of sit tight and notice all these, this little double bottom matching low. When it broke lower there and turned and went up, now you got a short trap. So I like going long there. And somebody actually sent me an email and they got trapped short here. And they said they recognized what happened. They got trapped immediately. And they're right. You know, you don't want to go short here because we've been trending up and everything's still above the EMA. You do have a break and a new high, but sometimes you'll get 2 legs up, and so you might get another leg from here on up that is equal from here to here, or actually from maybe even from that break right there to there. And so you got to be careful, and you definitely, even if you're going to go short, you can't go short after. Notice this, there's one leg down, then a little correction, then a second leg down. This does look similar to a failed second entry long, but I don't think you want to go short there. And you could have actually drawn this little short-term trend line right through there, and that would have been the first break, and you don't have a new low yet. So that's another reason why I like this, because you get your break and a new low, and then it reverses. So I like going long there, and that's a great short trap. And guess what? It goes up and then it shoots down. It still doesn't really get through the EMA till here, so that's the reason there's no short there, and that's really your first 2 swings on that trend line coming down. And you don't get a failed second entry long till there, and you don't want to go short right there on just that little bit of a correction and that much of a neutral bar. But when it tries to go higher again and turns down basically right there, it didn't quite get to the trend line the way I've got it drawn. It could be that this trend line's a little bit lower. It still works right there just as well, and that's probably more like it. But I like that for a short right there. There's not a lot of room right there, but this thing is really negative, and that's a failed second entry. That's 2 attempts to go higher, and it's a nice negative bar basically right off the trend line. So I like that one. You do have to be careful because of the little double bottom there. But there's no doubt this thing is reversed. You got a nice channel working down, and that's right off. That's the key entry point. Quick, easy move, and then, of course, we get a break. It's tempting to go short right there, but now you got a break and you got a new low in place. So, you know, you don't want to take that one, even though it could have worked just as easily. And there may even be enough ticks in there for it to work, but I wouldn't take that trade because now you've got the break, and even though it goes higher, just a couple of ticks and you got a new low there, and it might reverse. So you need more room. If it was coming off the EMA, maybe. And notice that's what happens here. Then we pull back. You get a first entry pullback, and then a second entry. And notice this. I don't have my line on there, but let me put it on there. Notice that this is a little trading range basically here. We traded down into this trading range. And you can see that right across there. And this is a little failed breakout. Notice how you went higher than that last little double top across there. And it's a very bearish reversal type bar. Just go short right there. It could come down here and give you just enough for a scalp and bounce, but it keeps going. And then it bounces right here. And I like this one because now you've had your break. You've got a couple of legs. Notice you got one leg down, a correction, a second leg down. It's not a measured leg, but look how far away you are from the EMA. So when it turned up right there And notice there's previous support across here, right there and right there. And so we've had support there already, and you're a little bit away from the EMA. I went back and forth. This one is real close to being a green one, but there's enough reasons to like this trade for a long that I felt like it could be a blue one. It's real borderline, but it's just close enough to be a good solid trade. If you notice all those things I just talked about it being away from the EMA, um, your break here, a move to a new low, and so forth. Um, and somebody asked me about this today. They asked me about the prices always pull back and test, even in, I think the question was even in a smaller range like this. And notice when it broke out here, it pulled back and tested. But sometimes you don't get a pullback to test these areas. And notice here, when we went back above it, right here, it pulls back and it tests that same area right across there. You can see that, and the line pulls back. So, yeah, the answer to that question is yes. And prices will almost always pull back. But even on a really strong trend, it'll pull back. It may not pull back instantly. Like right here, notice how this is congestion, and we shot through there. We didn't pull back and test it. But look what this big correction is right here. It's a pullback to test this area right across here. We didn't quite get there, but it was close enough. And notice we end up coming back and testing it right here. It came back again, and then it went higher. And so, yes, the answer is yes. Even later on down the line, if it can't test it now, it'll come back later. It couldn't get it here, so it came back one more time. And notice how we didn't quite get as high there. That's because was their goal, was to come back to this area and test it. And look at this leg here, that move right there. That whole move is one leg, a bigger leg. And there's a perfect measured move on the next leg. And where does it go to? Back to test this breakout area, and then it goes higher again. So yes, that's what prices do. Once they push through an important area of support or resistance, they almost always come back and test it. And if it's not immediately, it will be sometime later. If it hadn't got it today, it might be tomorrow or the following day. At some point, it generally, very rarely does it push through without coming back and testing it. And here's another example of that. Look where it broke through here, and it didn't come back and test this area. It came back, it tried it, didn't quite get there, and then it makes another one, and look where it comes back, tests that, and then it tries to go higher and takes off. So yeah, prices almost always come back. So anyway, we got this bounce here, we're moving up. I don't like this setup. It's not a very good one. It is a breakout pullback long. There is a break of this little channel, but that high is just right there, and that's still a bearish bar. We're not back to the EMA. There's a chance you push up here and make a double top or go one tick higher and turn down. So I think you got to skip that one. Um, and notice how we make a lower high here. I already talked about that a minute ago. You can't go short on that, but then it comes up and makes another lower high, and it turns and it goes right out the other side. I like just going short on a stop right there. Or you might let it break below and drop a limit order. Notice it came all the way back to right here, so you could have gotten filled 2, maybe 3 ticks back into that. Um, and you could have even waited on this bar and waited on a break below it and dropped a limit order in here. So there were several ways you could enter there, but because this went higher first and turned, then went straight out the other side all in one bar, I like just going short there on a stop. But that's a big bearish bar, and you can't hardly get in that on 2 points, so you just about have to use a limit order there. And look at it go. That turns out to be a really good trade. And then we get a break here of the trend line. It's tempting to go short right here, and notice that it's a second entry short, but at the same time, it's not a very good one. This is just more or less a double bottom here. We hadn't really corrected and got a move down, so I considered this being the second entry short, but I don't even like going short on that one. this bar is too big, so just kind of sit tight and see what happens, and it ends up going higher and then turn it down. So just go short right there on the stop. And this is really your second entry or way up here, and this is where your stop would have to go if you entered that one, but I don't think you want to enter right there. Um, if you did wait on a break here and then drop a limit order in here, you would have missed it because this went higher first and then turned down. And it didn't, well, it does come back here, so you still could have gotten back in it here. You still could have gotten back into where the original stop was, so that's another thought. Um, and really, you could have entered on, there's really three entries here. I didn't mark this one, but you could go short here because again, it went higher and then turned. Actually, no, this should have been right here, but there should be one over here that's green based on my other explanation. You could have waited on it to break lower, um, and then dropped your limit order in. It would have come back. I like adding on this one if you're still in this one. You probably wouldn't be in this one unless you entered way up here or something with some limit order when it came back. Um, but I like adding on here if you are just re-entering again right here. And if you got runners, just adding on to them. And look at that move go. And you're looking for prices to come to at least here, but there's a chance they may come all the way to here. And we bounce here, and notice what happens. There's a trend, there's a move up. It's tempting to go long right here. And again, you probably could. It's very similar to this trade. And there is a perfect measured move there. So I'm going to go ahead and mark that one. I'm going to make it green though, but it's a repeat type pattern. It looks very similar. It's kind of the same thing going on. But I think your best, smartest move is right here on this failed second entry short. Notice this pullback first entry, pullback second entry. I don't like going short there right into that support. And we were back above it and it's starting to kind of hold above it. It would have worked, but I don't think you want to take that trade. I think it's too risky. But when it fails and turns back up, even though this got enough for a scalp, you still treat this like a failure. And you can tell they trap people. Look how it shot off real quick. And then it comes back and it tests the original support area again. It holds. You got a second entry long here on a nice reversal bar. That's a blue one all the way. And the reason I still made this one green, even though this is a failed second entry short, is because this is that support and resistance line. And we're kind of swinging both sides of it. So, but there's enough reason to take that one. And it's borderline being blue. But I think this is the sure thing, the one you want to take right here, the two-legged pullback that pulls back and tests that previous support and it holds, and you get that reversal bar on the second entry and look at it go. And then it pulls back. And it gives you a second entry long right here. But this is a nice trap. This is the first break of this channel. Again, I got this off the, you could really find this one off the low, but if you didn't, you could get it off the high and you pull it down and it fits perfect. And you do get your break here and pulls back and it gives you that little trap, turns down and then look at that bar. Just go put a stop right there. And you figure it's going to probably come on up here and make a new high. And testing this area right here, but this thing just keeps on going. They probably trapped some more people there that thought this was going to be a double top across here, and then it comes down, but it finds support at the EMA and just kind of has to work its way out of that little congestion and then pulls back and gives you a failed second entry long. And look at that big bearish bar. Went out the top first and turns and goes straight out the other side. So you could have had a stop, or you could have waited on this bar and waited on the break and then put you a limit order, maybe a tick or so back in. You don't want to put it too high, even though you probably could have gotten filled way back up in here. If you get too conservative, you'll miss some of these trades, and this turns out to be a good move, and it'll go without you. So, you got to be careful about that. Somebody else asked me today, how often do you get a runner? Well, it really depends on how you're managing your runners. If you're automatically moving your stop to break even after you scalp out of one of your contracts or half your contracts or whatever, and then you move them to break even. There's a couple of ways you can manage that. You can move them to break even for the whole trade, which if you're wrong, you're going to lose some money. But a lot of times, more times than not, prices will come back and take out the break even stop on the runners themselves. And the ES is very efficient, and you see that over and over. But today was one of those days where there were a lot of runners. Prices didn't come back here until they'd gone several points. Prices didn't come back here until they'd gone several points. Look at this trade took off. It didn't come back until it'd gotten several points. Here's another one right here. Look, it runs multiple points before it comes back to here. Here's one on the upside that didn't come back. This one didn't come back. This one right here, I don't think this one come back. I wasn't here while this was printing, but I don't think, well, it did come back here, so it would have got you here. But you still got 3 or 4 points right there before it came back. So it just depends. Some days you get more than others, and it depends on how you manage the runners. One thing I like to do a lot is I will go ahead and scalp out at my 4 ticks, but instead of moving my stop for my runners to break even for the runners, because like I said, prices will come back more often than not, so you may not get quite as many runners that way, but normally they won't come back but to that exact break even point, and they'll tick through that, and normally they won't go even 1 tick further. So what I like to do to make sure I'm going to catch some runners is I will give an extra tick or 2 from the break even. So just to give you an example of what I'm talking about, let's say we want to enter on this bar just because it's a nice bar. No other reason I'm using this one as an example. I'll put my stop here and enter, and then once it's triggered, I got to go 4 ticks, and then my safety stop is up here. And so once it goes 4, it actually probably has to go 5 ticks for me to get out. So then I've got the runners going. So where do I put my stop on my runners to make sure I don't lose all my money? Well, instead of tightening it up to only being a 4 tick break even stop, which would be, just see where that would be. That's where you would have entered 0650, so your stop would have to come down to 0750. So that's where your stop would normally be. Well, what I would do was I would put it at 07 to give me those 2 extra ticks, and normally prices won't come back. Here they didn't come back either way to stop you out, so it didn't matter. But hopefully that example explains to you. Sometimes this stuff is easier to, it's real simple, but it's difficult to explain, and people get confused because they can interpret it different ways as well. So like right here, and it didn't come back, and so you didn't get stopped out until it came all the way back on the bounce. Same thing here, didn't come back till here. So keep that in mind, and maybe that's helpful for some of you that are experimenting. And experience will really help with that. Once you've watched it enough and you kind of learn what the market's doing, you don't get fooled as much. So, and you kind of learn. I mean, that's how I figured out a lot of this stuff, just through trial and error and doing it over and over and over for years and years. So, experience solves a lot of issues and answers a lot of questions in this. In day trading, and but when I say experience, I don't mean a couple of weeks or a couple of months or probably even a year. I'm talking about a few years of experience, and that's what it takes. I mean, this is not hard to do, but it's not easy either. It takes a lot of time and experience, and I gave you that example yesterday of like trying to like learning to not only fly, but then learning to be a fighter pilot at the same time. And lo and behold, a guy sends me an email and said he loved that analogy, because he was learning to be a pilot and to be a fighter pilot on top of that. So right now he's just trying to learn all the instruments in the airplane. And that's basically where most of you are. You're either learning the instruments, or you're learning to fly, or you've learned to fly and now you're learning to be a fighter. And you can't learn all that fast enough and still be as good as the guys that have already been doing it for years and years and years. So I hope that was helpful to more people than just him. But if it only got to one person, it was worth me saying it. So uh, he gets it now. He understands what I mean by how difficult it is to go up against people that are experienced at doing this every day. So enough on that. I'm going to wrap it up for the day. Hopefully you had a good day today. It's just a typical range day. This is not one of these range days where it's easy to go long or short off the highs and lows. This is range days where you got trends within that, and you really need to trade these trends. And they all played out like typical trends. And so, and some really good moves. And we ended up we closed yesterday um, at 2009.50, and we closed today just a couple of points higher than that. I think maybe, I can't hardly see it there. I think it's 2 point. I think we closed up 2 points. So look at all that movement only to close up 2 points for the day. But yet there's still all this movement in here that you can make money on if you understand how prices work and what the market's what it's telling you as it prints. And you can learn this. Just as I discussed a minute ago, you can learn it. You can't learn it overnight. It's not easy. It's not that hard, but it just takes time and experience. But if you stay the course and you don't give up and you don't try to trade live too soon and blow all your trading capital, then eventually you can do this. And I mean, I'm not the smart, I'm not this, I mean, I'm no dummy, but I'm not the smartest guy in the room. And, but I persevered, I stuck with it, and I had a positive frame of mind. And I believed that, hey, if I stayed with it, I could do it, and eventually I could do it. And so if I can do it, anybody can do it. So anyway, enough of that. I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.